out from under the bed. What does a ghost really look like?
We have to blame the lump. We have to blame the lump. He's in the chat right now. I tried to stream on YouTube, Twitch, and Kick at the same time. It didn't work. It's really not his fault. It's probably either my Wi-Fi's fault or the streaming software fault or something that's really the issue. So it's definitely not a computer thing. It's more of like an internet thing. I don't know. It just maybe it's too much upload at the same time for 3 platforms. But yeah, it'll be fine right now. There shouldn't be any lag. We should be all good. So I guess we're just gonna... I'm still sticking to YouTube no matter what, but I really want to find a way where I can also start branching out to Kick and Twitch just as like little side things. Maybe grow the community a little bit. But what's up, Gold Miner, Corey, Linta Glenn, the guy I am, AKJ Long, and wow, Mr. LinkedIn in the chat. Nice to see you there, dropping in the vibes. Yeah, I already kind of did the crypto segment. It was pretty straightforward in the test stream earlier. Bitcoin hit the final target of the swing like literally perfectly, and now it's pulling back a bit. But on the 4-hour chart, you do have a wedge and classic bullish divergence, and then we have Ethereum, which is flipping this resistance from the past month and a half or so into a support. That's really it. I probably would say ETH looks a little bit better than Bitcoin right here, but they both do have MACDs pretty much crossing over to red on the daily, so that is one thing, or one piece of evidence you could use to play devil's advocate on the bear side. But that's really it for crypto. I know I have a lot to update with other markets and stocks, so let's head into that. Yeah, the US 10-year, this is now the 3rd bounce. Let me delete this wedge because that's already played out. This is kind of now the 3rd bounce off of the same level. Let me just try and place a support right here. We're just going to make this a little zone. This has really been your support zone for the US 10-year over the past 4 months. And right now you're trying to bounce off of it yet again with a bounce also back above the 200-day moving average and kind of a bullish engulfing candle on Monday. So this is not bad. As long as it respects this range, I would say this is more bullish than bearish. Then we've got crude oil. The breakdown of that bearish pennant did play out, so I'm going to delete that now. We're going to extend this wedge, kind of turn it into a channel, and that's really it. You're just in this downsloping channel for crude oil. Right now it's kind of fighting these previous lows from the past few months as a resistance. We'll see how that kind of turns out. Moving into metals, you've got gold, which has been ripping over the past few weeks. You might have if you go down to like the 4-hour chart, a little bit of a bullish pennant forming here for gold, like something like this. After a nice run up, you're getting this little flag triangle thing, and just the probability of it breaking higher is probably probably higher than the probability of it breaking lower. And then we've got silver. It's a very choppy chart. Let me try and clean this up a little bit. There's just zones everywhere on this one. Alright, so probably something like this is the easiest way to view it. You've got major support around 21 and then big resistance in the high 20s. You're right in between them. This is really too much of a handle to be a cup and handle in my opinion, so I would just look at it as a 50-50 short term. And then you've got the dollar currency index. there was a lot of bearish variables over here. You had a resistance close to hidden bullish divergence. I mean, hidden bearish divergence, except you made a slightly higher high, so that doesn't really count. But now what you are doing is working on potential hidden bullish divergence. I said that correctly this time, because you've made a higher low on price, but a lower low on your MACD. And if we really kind of delete all of this, you're just hoping that you hold 101 if you want the dollar currency index to go up. However, if we really zoom out over here, and this could be something that helps out equities in some time, we could take a much larger view of what's going on here and look at this as kind of a major inverted cup and handle. Whereas if it cracked 101, that would be a major breakdown for the dollar currency index. And then finally, a quick look at the Hang Seng Index. If you're in premium, I did very recently, actually this week, alert a Chinese stock as a swing. And right now, you've got the Hang Seng Index pretty much hidden bullish divergence is kind of like class B, because you made the same low on price but a lower low on both of your oscillators. You're trying to get back above the 200-day moving average, and you're also trying to break out of this downsloping channel. So got a breakout test here for the Hang Seng Index taking place. And that's really it for the other markets. Kind of mixed, which is not too different than stocks right now, but it is what it is. So let's talk about what's going on in the stock market. What are my thoughts on how things are looking right now? Well, it's not been easy so far this year, right? If we go back to the beginning of the year, and we just kind of delete all of this, and we look at the price action so far for 2023. All right, this is pretty much your price action so far this year. This is all you've done in the stock market throughout the year. For today's volatility, I would say it's kind of average. If we go back 20 years, 11% up and down would be a pretty wide range to start the year. But you've been within 375 and 420-ish on the S&P 500 throughout the course of the year. And this is, in my opinion, really just a large, long, boring test of the 200-day moving average on a very simple level. You've been testing it nonstop, really since the beginning of 2022. When we were away from the 200-day moving average on the SPY is when the market was very simple, right? If you look at it pre-top on the SPY, very simple uptrend. If we look at it post-top, at least for this part, very simple downtrend, right? The further you are away from that 200-day moving average, the more of an extreme trend you have, just within the last couple of years. I'm not saying overall, I don't know the statistics on that. But we were pretty far away from the 200-day moving average throughout that bull market, and then throughout the bear market up until probably the start of this year. We were pretty far from it as well, and we were kind of going straight down. But you can see the more that you get closer, or the closer proximity you have to the 200-day moving average, the more choppy the market gets, because bulls and bears, if you saw the thumbnail of the stream, that kind of is depicting what I'm talking about. Bulls and bears don't know which way they want to break it to. Or bulls are trying to break it one way and bears are trying to break another way, however you want to look at that. But we can see the same thing happen right over here, right? So this price action over here is very similar to the price action over here. And then we have like the other price action, which is like the bullish one where you were far away from the 200-day moving average, and then the bearish price action where you were far away from the 200-day moving average. All right. So you have bullish. What's the way I can coin this? I don't even know what is in the chat right now. Why is that even on my Streamlabs? All right. Let's call this, you had bullish distance over here in this green box. You had bearish distance over here in this red box. All right. Distance for your trend, whether you're a bull or a bear, is probably good. Now I'm going to call these little blue boxes proximity. This is kind of not BS, but I'm just using random terms off the top of my head so we can kind of remember this for the future, and I can come back to this later. Right. So just looking at some simple trends here. This is your bullish distance, this is your bearish distance, and then these blue boxes are your proximity. When you're in proximity to the 200-day moving average, you can see a lot of choppiness. So the main thing we are looking for long term, this is more of an investor approach to technicals, which again, they can be a little bit more less reliable because more things like the economy and individual stock performances by quarter or multiple quarters are going to be more important than just the 200-day moving average. But when we're looking at this from a larger point of view, where it's really the main thing we want to see is which way do we break away from the 200-day moving average, right? And that's obviously going to take some time unless we have some sort of catalyst in the market. But this is really I know I kind of made it complicated, but in my opinion, this is the simplest way of just using one technical, the 200-day moving average, to get a glance of what's going on in the stock market and why we're being so choppy right now. Of course, there are a bunch of other variables that are leading to this as well. I'm just using this one line to simplify all of that into one BS equation. All right, so let's try and undo all of this so I don't lose all of my SPY levels, and let's talk about everything else that's going on. There we go. So if we want to look at the bullish side first, you have broken out of your larger descending broadening wedge. You're now in a shorter term descending broadening wedge. These white lines are also back above the 200-day moving average. All of that is good. If you want to look at this in a little bit of a bearish way on the daily, I probably would just delete all of this again. And then some people are starting to bring this up, the potential for this little head and shoulders to form on the daily for the SPY. Kind of something like this. And your neckline will be that. So you've got the bullish, you've got the bearish. Another thing that a lot of people talk about, I know Cheddar Freeze has talked about this quite a bit, is back in 2008, we had the same exact pattern. According to textbooks, this is supposed to be a bullish pattern, a descending broadening wedge. But basically in 2008, what we did was we broke out of it. We did literally what we've done so far, and then this happened, right? And of course, just like we have right now in the economy, there is some turbulence going on fundamentally, which could lead to this failing, right? So there's both sides to it. I'm just presenting both of the cases. This is much more of a large or longer term approach to looking at how the SPY is performing right now. If we go down to lower time frames, you've still got this a little bit of a zoomed in approach to the broadening wedge. If you go down to the 1 hour time frame, I've got this upsloping channel. So the way that I'm taking the market short term is as long as we stay within this upsloping channel, things are good, right? We could keep going up and up and up very easily like this. Who knows how high? But once we do break this, and that's obviously assuming that you don't break up, which would be harder to do. Once we do break this, then I would probably start to switch more towards the bearish side. But as long as we're still within this, I think it's okay because again, we're still uptrending short term. All right, so the trend is your friend for bulls very short term. That can change whenever you break down from this. And that's just a simple way that I'm trying to view the SPY right now. There are a large amount of other things I could bring up right now, but I just want to stick to those main points because within the next couple of weeks, most of the points that I can bring up now will probably change. Like Maxime in the chat saying that looks like a bear flag to me. There's a lot of different valid arguments, right? We could take this all off again. This is probably what he is looking at. The arguments are all there. So it's just a matter of, again, just going back to what I originally talked about with the distance and the proximity to the 200-day moving average, which way we start to kind of break to. And that's it for the S&P 500. Let's move over into the QQQ, which, again, nice bounce above the 200-day moving average, back test of the 200-day moving average, and then running again. This is probably, if we're just talking about the technical of the 200-day moving average, this is much better than the S&P 500's performance so far this year. All right, because if we look at the SPY right now, it's still hanging around the 200-day moving average. The Qs have been able to continue breaking away. However, they were not able to break above this critical zone at 316. You see this low, you see these lows over here, you see this little high you put in after a gap down last August. You see this rejection from February and this rejection from last week. This 313 to 320 range, this little yellow box, is pretty tough resistance for the QQQ, and it does not help that you have classic bearish divergence right after rejecting it. So on the daily, it's looking a little bit like a short-term double top with classic bearish divergence. So I would probably say I'm bearish over here unless you're able to break above this yellow zone. Volume is starting to drop. You're kind of rolling over a little bit. If we were to kind of make this into a channel, you've already broken down from it. So it's kind of the opposite of what we saw over here. This was probably good. Well, obviously in hindsight, it was good for the market. And if this is going to be the complete opposite reaction, which it might not be, but if it is, this would be bad. So let's say this does play out more. The next zone of support I see is right under $300. You can see that was resistance in the beginning of December, and you chopped around it throughout the beginning of this month. So right under 300, you could find a little bit of support if this breakdown does continue to play out. I mean, and to be fair, you've seen the Qs really lead this rally, even though the SPY has had a decent rally from the lows a couple weeks ago. But the Qs have really led because you have so many names, large cap tech names, which we're going to look at in a bit, that have just been standing out. You had Tesla have this nice little run. This is a leaked premium trade. It almost hit the target now. It's kind of pulled back. You had Google had this nice run after a channel breakout. That was a premium swing as well. That did hit its first target. We have Apple, this inverse head and shoulders, that little run after the right shoulder. Meta's been doing well, just kind of curling up. There's not much of a pattern there. There's a lot of different tech names that have obviously allowed for that to happen. So, you know, if that continues, if that trend continues, good. But at some point, you would figure a large amount of these would pull back, especially when you look at names like Nvidia, which pretty much just went straight from $140 up to $275 in a matter of 3 months. So there should be some pullbacks at some point on some of these names. I don't know when, but once they do, maybe the Qs will kind of come back down to the reality of what is the rest of the market, like the SPY, the ARK, the IWM, and speaking of the ARK ETF. It was tough. It's tough. You failed. And this is something I will admit I stepped on the gas pedal a little bit too early. I talked about this, I don't really remember when. I've only streamed like once in the past few weeks, but I did talk about this breakout over here, and I was optimistic about it. So far, it's really done nothing, to be fair. I mean, you broke a channel. You were trying to break the 200-day moving average. That also happened after you were able to backtest this blue zone over here. To me, the stage was set. It just didn't do anything. It just failed so far. I don't know. Maybe this is a weird backtest, but at this point, I think the simplest thing to do would just be extend this out and just continue to look at this as a downsloping channel. And when it comes to these channels, it's always like the trend is your friend until you break it. So this is kind of, it's a bullish pattern, but it's bearish until you break out of it, right? So this is bearish until you break out of it. And then that would be your switch to bullish. And that's the opposite of what I was just saying on the S&P 500. Let's go over to the 1 hour chart. This is bullish, even though it's technically a bearish flag, it's bullish price action until you break out of it or break down from it, and then yeah, it would be bearish, right? So it's just until you are within the confines of those trend lines, it's okay for the trend. But once you break it, obviously you can get that reversal. And that's really it for the ARK ETF. And then finally the Russell 2000. I don't know, this is the 4th time now that this is tested. This zone over here used to be major resistance before breaking above it in the post-COVID crash run. Typically, you want to just, when you backtest previous resistances, right? When the Russell 2000 came all the way down from these all-time highs and dropped over here, that should have been it. You should have just seen this. But obviously things happen in the market, and instead you got this. You got a failure to really get a move back above, and now you're back down here. It's not the best price action, right? These were major highs. For now, they are major lows, to be fair. But just the way I look at it is the higher amount of times you test this without being able to kind of break away, the scarier it gets, because you break this and I don't know, it's just under this zone. There's just not a lot here. There's a lot of room to fall there. It lines up with the potential schematics of a lot of harmonics as well. Like if we were to draw this out, X, A, B, C, D, you know, this happens. A lot of names which have already been shattered could be shattered more. I don't know. It's just in a range, I guess, right now between 165 and 200, but we have to wait and see. Then finally, we've got the VIX. There's not much of any readings I could get off of this right now. If anything, I would just say a little bit of a wedge is starting to form. On the 4-hour chart, you got major support at 18.15. We'll see. Maybe it gets down there. You get a little bit more of a rally in the market. You get down here, and then it bounces off of that, and we'll take it from there. But again, it's hard to tell until we actually see that price action unfold. And that's really it for the market. I know I can't really give out any chocolate chip cookies tonight, but there's just not a lot to work with right now. So I think right now it's just more of like, there are names you can find that'll run. You know, it's not easy to find them. I've tried my best. Swings have done okay recently, but it's gonna be, in my opinion, a little bit more time until we have a clearer reading. But that's okay, right? Because once we actually do start to break away in one direction, the move can be very, very aggressive. The longer the consolidation, the larger the breakout potentially. So we will see what happens. That's it for the market. Let's talk about some individual names quickly. Let's go over the swings. GameStop. This was alerted pretty much on earnings day, and literally on the same exact day it hit 3 out of 4 targets. You can see it over here. Yeah, GameStop was alerted right down over here, and then on the same exact day it went up, hit 3 targets, earnings, went up to 200 moving average. Now it's pulled back some. Actually did alert this in premium as calls today. AMC had a pretty crazy move, so I was looking at it as a potential sympathy play, and it did make a nice little initial breakout move. There still could be more left in this after the back test that took place later in the day. But overall for the GameStop swing, if we go over to the 1 hour chart, you've got this wedge breakout potentially happening with hidden bullish divergence. If GameStop can get back above and hold above 24, there could be more left in this. That 4th target on GameStop, I think, is 100%. It's 100% profit. It's already hit 3 targets for 50% profit in what, like 1 week? If it can really get back above and hold 24, and 24 is basically this level. If it can get back above and hold that, obviously you'd have to take out the 200-day moving average. But if you can do this, there just isn't a lot there. There is room there. Right up until about 35, I don't see really much turbulence, and look at where that target is, $35. So that's GameStop. I did alert 2 kind of similar names, and the technicals on them are a little bit different than what I usually do alert, but we've got Ford and GM. All right, Ford and General Motors. So on Ford, I'm watching this quadruple bottom, this major symmetrical triangle. It could break either way. If it breaks to the downside, the stop is there. You've also got a slight edge on the MACD with some classic bullish divergence. I'm just hoping that for the 4th time it bounces off of this and at least hits one of the 2 targets. And if it doesn't, the stop is there. It's as simple as that. But the nice thing about this is that this support, if we go back in time, it's acted as a support multiple times in the past. So that's why the stop is right under it. I'm just hoping that it can continue to hold it. It's a very, very big level, $11. And then GM is not too different. This was alerted, I think, yesterday. Very similar. Again, to many, this could be perceived as a major bear flag, right? But if we zoom out over here, $32, major support historically. If the bear flag does break down, the stop is right under it. But the last 3 to 4 times you were at these levels, you bounced off of them. And on this time, you do actually have hidden bullish divergence. So there are a little bit of a bearish, there are some bearish variables you could bring up here. But again, it's not me saying that this pattern is going to break up and go to the moon and go to all-time highs. What I'm mainly looking for on this one is just a little bit more of continuation. Even if you want to call this a bearish pattern, it's not broken down yet, right? So I'm just looking for a little bit more of a continuation before maybe then eventually it does break down in the future. But this is like the 4th time now with hidden bullish divergence. It just had a very quick sell-off from 43 to 34. I'm just looking for a bounce back up to at least 38. That's really it. It's just a swing. You know, we're not looking at these large time frame, long technicals, long-term technicals for an investment or anything. I'm just trying to see what potentially could happen, and if it doesn't, it fails. It's that simple. That's how you have to look at stuff like this. It works or it doesn't, but as long as you understand the risk and the reward, it is what it is. All right, so that's really it for the swings. Let's get into some other names now. Fisker, classic bullish divergence on the daily, potential double bottom off of $5.60. As long as it holds 560, I guess that's okay. If it breaks that, then you've got no support under you. Just like when you broke 651, you had no support under you. That was all-time lows. But over the past month and a half, you have developed a little bit of a support, at least for 2 touches off of $5.60. And a little bit of classic bullish divergence on the daily. Of course, if we really want to zoom in here, that second low, you did get a bullish pin bar candle right off the bottom. That was actually this Monday. So hold this and it's okay. I don't know if it'll be able to continue holding it, but that was a gap fill from the earnings gap up. You're bouncing off of it. You're in a larger wedge. You've been in a bunch of different larger wedges. They really haven't done too much. But one little thing I was able to spot, I think it was Monday as well. You got a little bit of a 1 hour wedge breakout. It went up like 3% the same day. Like literally I shared in the Discord like right over here and then it went up to here. But over the past 2 days, actually I don't know why I keep thinking it's Wednesday. It's literally Tuesday. Over today, you back tested it. So you still got that little wedge going on over there. I don't know. 560 is the key level. That's really all you need to know. Clov, on the other hand, has not been able to kind of bounce off of its previous low like Fisker and actually put in a new one. I don't know. I don't know what else to say. I feel like I say this every single stream. I still look at every stream for anyone telling me, oh, you forgot about Clov. You don't look at it now because it went so low. I'd still look at every single stream. But I can't really say much. This is my reaction. Not here to fake anything, not here to be ignorant to anything. I've talked about it every single day. There just isn't words to say until there is. It sounds depressing, it kind of is. I think it just comes down to a personal thing at this point. So I think getting back above 86 cents would be important, but I think more than any technicals, fixing everything that's going on with the company would be important as well. All right. Now that's really it for the swings and some other names. Let's talk about what's going on with large caps. Let's start off with Apple. You've got this massive inverse head and shoulders on the daily. You're testing a breakout of that right now. I don't know. It's only a few days of testing it. You've done it successfully so far, but you'd probably want to start see it heading higher very soon. You've still kind of got this gap fill at 171. It's very sneaky, very quiet, but that technically did not fill all the way back from the gap down on August 22nd of last year. It's just looking at the cues. You rejected this resistance twice. You've got classic bearish divergence. I don't know if it's the best timing for Apple to be breaking out of a massive inverse head and shoulders when the cues are doing this, but we will see. Nonetheless, I started talking about this like down over here when I was initially looking at it like a cup and handle. At least the move up to test the breakout was pretty nice. But it still is just testing. It is something to still keep an eye on, in my opinion. Even if we go around the 4 hour here, we've got this gap fill right at 163 as well. So there's gaps to fill. It's back testing the breakout. I mean, again, this is not financial advice, never financial advice, but just from a reward to risk standpoint, right? Targeting that gap fill right over here. Actually, that's not the same one. What was the gap fill I was just looking at? Oh, okay, I see it. Targeting this gap fill, right? It's only 3% away, I know. And then putting a stop right here, you'll pretty much have a 3 reward to risk, just playing the back test. But I don't know what the cues do. I don't know if it messes that up. But that is Apple. Let's move on to Meta now. Kind of just shooting up. I think 210 is a pretty solid resistance level. We zoom on over here, you can see it was a major high from July of 2019 and a major low from June of 2020. So it got pretty close to that level. Now it's starting to roll over a little bit. I will say one thing though. There's 2 names that come to mind. If the market does start pulling back, there are 2 names that performed very, very well over the past 4 months that could, I have to be very careful with my wording here. There are 2 names that, if the market really does pull, are pretty extended right now, okay? One of them is Meta, okay? If we want to look at some other bearish variables, you've got classic bearish divergence. You'll probably chart out like a little bit of a downsloping channel breakout here, apart from this little 2-day fake out, whatever that was. Number 1 is Meta. The other one is NVIDIA. We already looked at it. Another name with classic bearish divergence on the daily. It's been running straight up for 4 months now. You could probably also chart out a channel over here or a wedge. These names could have some give back if the cues continue to pull back. So these are 2 names that are very extended right now. You've got classic bearish divergence on both oscillators. On both of them. Bearish patterns potentially too. We'll see. And this is more my reversal trader mind thinking than a continuation trader. But they probably will pull back at some point. I don't know if they're going to pull back right now. But if the moves start to happen in the overall market, these will be two names I will be watching to see if they can really kind of... That's all I'm going to say. What else is going on? Amazon. I don't know, Amazon's kind of been boring this year, except for that one little run, which of course was alerted as a swing. Very beautiful. But after that, it just kind of has been pretty whatever. We already kind of talked about Tesla and Google, but yeah, Tesla, I am watching this potential inverse head and shoulders. I don't understand the chop here, but again, what is there to understand sometimes with Tesla? Even if we like, all right, on the daily for Tesla, you got a larger inverse head and shoulders. If we go over to the 4 hour on Tesla, you could probably draw out another inverse head and shoulders. So it's still got the variables. Again, I have to start taking a lot of these large caps with a grain of salt because of how the cues look, but it's like a little inverse head and shoulders and a much larger one. All it needs to do is continue curling up. If it can do that, and it does break above like 215-ish, which is not only a 200-day moving average, not only this high from February, this whole entire rally, but also a major historic level. Tesla above 215. I mean, if it breaks 215, there's not much till like 260. That's the second and third target already hit of the premium swing. All it has to do is pretty much get here. And then there's just not much. And that also is a gap fill. And also a high from here, and a low from here, and a low from here, and a high from here, and a low from here. So you can see that this range opens up, but only if you can kind of get above that. So we will see. And then Google, nice channel breakout move, already hit the first target of the premium swing. Now it's kind of back testing the 200-day moving average and this $100 level, which is historical. It dates back to spring of 2021. Big test. And that's really it. That's the majority of what I wanted to talk about. Today, I had two nice little winners in premium for options. Actually, last week, let's see. Last week, I think it was Friday, was the first back-to-back losses in like the last 30 options I've alerted, which is not even that bad, considering if you look at all the winners right before it. But I don't know. Usually, whenever I say like comeback mode in premium, it's like more losses than that. But just because it was like the first two losses in a long time, you know what I had to do. So we ended up ending last week not too great, but I got the vibes coming in from the premium members to initiate the comeback mode, and so far 3 winners in a row this week. That Apple was again from last Friday, and so far these are the trades so far this week. We already talked about GameStop. Even today I caught a little move on AMD, which was this, a very nice little double bottom, and I alerted it probably somewhere like right off that second low. So I just saw a little bit of a double bottom on AMD. It lined up with the historical support level. You can see what I was initially looking at over here. Of course, everything is time-stamped. Right over here. This is what I was looking at first. I saw that previous support, the little double bottom, right under that VWAP, and then it eventually ended up making the move. It actually went all the way up to here, like at the end of the day. And then this was the GameStop move. Initially, what I shared on GameStop was this. You can't see the number because it's cut out from my stream, but this line over here is 23.49, 23.49. That was the first level I charted, and it made a nice solid move up to that first level. You can see it went up to right over here. The calls went up 30%. Actually, that level I charted out when I initially sent out that ping, that level ended up being the exact high of day pretty much. Okay, I was off 5 cents, but it pretty much, I alerted it here, it went up to here, and then it pulled back. But even going into tomorrow, like let's zoom out over here. GameStop, huge wedge, back tested it. This is a 5-minute chart, so going tomorrow, let's go to higher time frames. Even if you look at the 15-minute, you want to look at this as a descending triangle. Okay, that's a bearish pattern, but it broke up. Go to the 1-hour chart. Same thing, bullish flag, hidden bullish divergence. Flipping this resistance from $22 back in February multiple times back into a support, 2 major bounces off of that in the last week. So in my opinion, the big thing for GameStop is continue to hold above 22, and then like I talked about, when we initially looked at in the stream, then break above 24. Because again, if we go back in time, look at how major our support $24 was for GameStop last fall, and then it flipped into a resistance. Even last Friday was high of day. So this little range that GameStop has found itself within, whichever way this breaks, could be very, very telling. This is something I'm going to continue to monitor. Might as well just set up my alerts at this point. I mean, I've already got an alert set up over here, but I'll set up one right there and one right here. You want to set up alerts like that so you can always be prepared for moves. Make sure to get TradingView. I am a partner with TradingView. My link with them is in the description if you want to sign up. And yeah. So that's really it for the charts tonight. Let me know what's going on in the chat. Hit the like button, hit the subscribe button. It sucks I wasn't able to start streaming on Kick and Twitch. I want to start to kind of lean into those as well. YouTube always used to put me on like Discover page and like search and everything. They just don't do it anymore. I think I played way too much copyrighted music for them to like me anymore. But yeah. Gold Miner in the chat says, but Dad, I wanted some chocolate chip cookies. Not tonight, unfortunately. Maybe when we get some more variables, you know, some sugar, some flour, some chocolate chips. Maybe then we can have some chocolate chip cookies, but we need the variables, you know. That's a nice little reference to Mitray's cake baking technical analysis analogy. I sound like such a nerd right now, I feel like. All right, that's really it. Make sure you hit the like button. If you're on the Discord, the link for that is in the description. Check that out. Everything's in here. Go follow me on Kick. I don't know how I'm gonna do this. I tried to multi-stream earlier tonight. If you caught the earlier stream that I had to kind of end, I tried to also stream on Twitch and Kick, but it just, I don't know, something messed up. It just was too laggy. So I'm gonna maybe, instead of Twitch and Kick, I'll just try YouTube and Kick tomorrow. Maybe that'll be okay. We'll see. But go follow me on Kick. It's a new streaming platform. Just Champion Vibe. Kick.com. Kick.com/Champion Vibe. It's pretty cool that I've got the Champion Vibe on YouTube, Twitch, Kick, and Twitter. Unfortunately, I don't have it on Instagram. If somebody can get me that, would be great. I also don't have it on TikTok. So, but I've gotten all those. And yeah. Gold Miner says, how does it feel to be back? I hate taking breaks. I know the last like 6 months have been so many different breaks, but it's just literally kind of impossible to stream when I'm traveling. So it always feels great to be back. To see all of you in the Discord and on Twitter and in the stream. Don't tell anyone, but the stream viewers are my favorite. Okay. But yeah, it feels good, but it definitely does take some adjustments. Frank, you only look at end phase. It's kind of filling this, I mean, it's already filled the gap, but it's kind of hanging around this gap fill level. I don't know, it's like kind of hoping that you start to bounce off this, but if you can't, like, the major is almost this blue zone, you're under it, and you even back tested as a resistance. So I would probably, how do I phrase this? I would be bullish if it broke above that, but it's under that right now. So kind of the opposite for right now, but that could change in some time. You know, maybe a little bit of a wedge starts to form here. We'll see. All right, so that's gonna be it. I think what I'm gonna do tomorrow is stream on Kick during the day, probably. So again, make sure you go follow me there, kick.com/championvibe. Make an account, it takes 2 minutes. And I'm gonna try to do a day stream on that tomorrow, see how it goes. All right, so you can catch me there or in the Discord. Have a good night. Thank you for watching the stream. Peace out.